Hi, everyone. This is Reeta Casey coming to you live from Orlando, Florida. And welcome. This is my favorite topic. This is the 6 steps to financial freedom. You on the path to building wealth and retirement. You know, in our crazy real estate business, we're worked so hard that so many times we simply neglect ourselves. And we neglect our money, and are we taking care of it? We're always out busy serving clients, so it's really critically important that we are here to make sure you're building a financial, profitable business that then is netting you money. And I'm going to teach you the steps that Rick Ruby, our founder, based this whole program on, and that is helping people build financial freedom so that you can retire one day and enjoy your long career. So, everybody, to make sure you have an effective webinar today, please print out the 2 handouts we have for you, which is a personal budget form along with the how to use form. And I do want you to make notes. If you don't have the forms right now, please take some detailed notes. And then after the webinar is over, we're going to email out to all of you. It will be coming from Tennille at the Core Training, a sample personal budget. So it will go along hand in hand with your how to use form and the blank form that you have. So here we go. The handouts would be when you signed up for the webinar. They should also be available to you to print out. All right, so let's move forward. Now, I have to tell you the reason this is so important is because when I was out selling real estate, and then Rick Ruby asked me in 2001 to be a part of a new, different training coaching company, I was very excited. I also got a little bit nervous because I knew he would be looking at all of our numbers. So when he looked at my sales numbers, he's like, girl, you can sell. And then when he got my personal budget, he goes, whoa, but you have no money, okay? So he understood the scenario of, hey, just don't pay attention to it. I mean, I have to share with you, growing up, really didn't talk about money in my family, never really had a budget, never talked about it. In fact, when I was in college, I graduated from the University of Tennessee, and would you believe I majored in economics? One of the reasons was it required the least amount of accounting. So it's not something that I ever enjoyed doing in terms of numbers, P&Ls, and personal budgets. However, Rick Ruby changed my world, and I now love this form to see how the results, how I am empowered to change my financial future. I mean, if you look at it in 2001 when I started and I was selling, I had no money saved. I had no money saved. Now, that was 15 years ago, no money saved. And thanks to Rick looking at my forms over the last 15 years, pushing and coaching me, I've been able to step away from real estate and focus on this, training folks like you, great agents like you, on how to improve your business, your life, and your personal financial freedom. And I now am at just a little over 3 million, my husband and I. So I'm able to do this because I love it. I want the same for you. Listen, if I can do it, you can do it. And this is a very simple way to make that happen. So get out in front of you, your personal family budget and the how to use form, and let's get started in your financial world, all right? So here we go. Step 1 on the personal budget is you got to do it every month. You got to look at your numbers every month and see what you are doing. So the simplest way is the less you handle your money, the better. So you want to collect your bills and put them in a drawer. You always have at least 30 days to pay your bills, so don't freak out about that. But collect the bills and collect your paychecks. So you may have to get yourself in that position to where you can just collect them in a drawer, and then once a month, I take them out and I put all the income checks I have on one side and all the bills on the other. And so as I do that, I start filling out the form. So I put Casey on top of personal budget. I put the month and the year that I'm in. And then you'll see column 1. There's some ticklers to remind you of all the different bills you have. Column 2 is what you actually start filling out. Now, that's the minimum you owe for things. And that's also going to be what we call your survival number. That means those are things that you have to pay every month or you will get in trouble. You will. So that would be like your house payment or your rent payment, your car payment, If you have a student loan, you got to pay those, credit cards, and electric, gas, phone, things that you have to use every month, okay? So those are things we're going to put in column 2 that we are committed to, that we have to pay. And let's see how much it costs you to exist for a month. Let's see what your survival number is. That's the number that will keep you up at night if you're not hitting it, because you know that you have to pay that. All right, and then you'll see, even, and all these categories may not apply to you, but they're there to help you remember. But when you get those bills and you take them out and you separate and you have just the bill itself, you're going to see on it a minimum owed and what you actually owe. Now, normally your house payment is going to be the payment of your loan, and that's going to be the full amount, and your car rental or a payment will be that. The credit cards may give you an option, because it may say you owe $50, but your balance is actually $3,500. So in column 2, you're going to put $50. You know you have to make a minimum payment to stay in good standing with them. Many are going to be just one price, like electric, gas, phone. Those types of options are going to be there. We even have, again, different topics down here, like cell phone and gas and groceries. So you're going to eventually get to customize your categories, but column 2 will simply be for the things that you must pay, okay? Now, column 3 is going to be where the totals that you have to pay. But for now, I want to talk about the fact that we've gotten everything out of the drawer. We've gotten the money that we've collected, okay? So if you've gotten your commission checks, they should go to your business checking account first, because remember, you're running a business, whether you're a PA or you're incorporated. All the money you bring in needs to go through a business checking account first. You pay all the bills in your real estate business, and then you write yourself a check to your personal checking account. So we then go from writing all the minimums we owe in column 2 from the bills. We're looking at the income that we brought home, and we're going to now record all of that in column 5, okay? So put in how much you brought out of your business into your personal life. If your spouse works, that's where you would put their paychecks. Let's say you got a refund on something and you want to put the refund there. If you own rental properties, you could put the rental properties there. And then your expenses for your rental homes would be in column 2, because you have to pay those because you have more than one residence. So we're going to put all of the income we brought in column 5, and then all the bills that we have to pay and what amount we are definitely obligated to pay in column 2, okay? So that's how we first start the process. Then we're going to start writing checks. So we want to see how much we brought in, because what we bring in has to be more than what we're writing checks for. Now, the first time you do it, you may have a balance in your checking account. Let's say you have $1,500 in there already before you deposit any of these checks. Go ahead and write in there, in checking account, $1,500. So now I know the total of all the money I have, what's in my checking account now, plus the checks I'm going to deposit tomorrow after I do this budget. And then I can come over and deduct from that the minimum I owe for the month. So maybe, let's say you brought in $10,000 in column 5, and your minimum owed right now is about let's say it's $5,000 for your minimal existence. So we know we have an extra $5,000 between what's coming in and the minimum we owe. So that's when we start looking at the true balances of the ones that we have an option to pay, which would be like a credit card. So you're going to see, if you look in column 1, we have credit cards, and so there's a line with a B. That's the balance that you owe on that credit card. So you want to record that on what you owe, the type of card. So if it would be American Express, you would put AMX, and then the balance with the dollar sign would be, let's say $3,000 on American Express. Now, American Express says, you know what, you don't have to pay the whole thing this month, so you could pay $200, and that's what we put in minimum owed. And then on column 3, we're going to write the amount of the check we wrote. So what I would do I would suggest you guys do on your form is put column 3, and that would be the check written. So you could write that on there as a little notation. Column 3 is the actual check written, okay? And then we're going to start paying the balances, the credit cards that have the highest interest rate first. And so you want to make sure you know the interest rates, and that's written on there. So if you have several credit cards, write them out with all the balances and the interest rates. So we know what to focus on when we have more income than expenses, and we can start paying them down. So again, step 1 is to fill out this form, and the best way to do that is to do it once a month, because it's easier when you only handle the money one time. If you also look on the slide, you'll see one bank, you have the accounts. You have your checking account, which is where the money goes into, and that's written out of your business account to yourself personally. And then we have your savings account and a money market and a float. So we'll talk about those in a little more detail. So again, and this will take you a little while to get the flow of this, but working on this every month is going to take you more hours in the beginning, but you will get there. Okay, this is what's going to make a big difference. We're also going to send you a sample, so when you look at the sample P&L, personal budget, you can look at it along with the how-to-use sheet. All right, let's look at the how-to-use sheet actually right now. So first of all, pay the bills once a month. Okay, and that means you're going to collect them. Usually you can pay them somewhere between the 1st and the 4th. Okay, get them all out, get them paid for and in the mail. Keep all your income checks in a separate envelope. Remember, I said you're going to have 2 piles. One pile on the desk would literally be the cash that you're going to deposit, and the other stack will be the bills that you're going to work with. Number 3 was only bills that have to be paid go into the minimum owed. We talked about that. And for example, a credit card, you might have 50 owed, and you have a $5,000 balance. So the balance is what you're going to write in column 1, so you can always keep up and know all the time that you're working on reducing that balance. Okay? Now, once we have column 2 filled out, we can total it and see what is my survival. Okay? What is my survival right now? Now, and in just giving you a very simple example, a couple of months ago, my survival was around $11,000. Now, I've been in my dream home for quite a while. I refinanced it twice with Rick, and so that's about what my minimum owed was. So I'm going to share with you what it is now in just a moment. All right, so we've done those 2 columns, and then we write down how much we paid. The goal is that you're going to find a place for all this money in column 5 to go, whether it's going to be to cash a check so that you have some money on hand in a drawer for the month, for purchases under $20, to how much you're putting in your savings account, which we recommend 20%. So the difference between how much you bring in 5 and how much you owe in 2 is going to show up a lot of times in the amount saved. So as you write the checks, record them all in column 3. Okay, so now we've written all the checks, and we see what we have left. Now, amount saved means that that's going to be the difference in how much you pay over and above, like, for example, your house, which we're going to talk about. If you're paying more towards paying off your house, we consider that savings. And we also consider the difference between how much you paid in checks and how much you brought in. And then that money can be put into your money market account, and we're going to look at how much is saved. Now, where column 4 is, I want you to write yourself a notation. The goal is that you save 20% a month. That's what we really care about. So beside column 4, just put goal, save 20%. Remember the little notation where it says 3 for amount paid is the amount of the check written. All right? Let's continue on. So we have on here step number 2, pay up all the revolving debt. We talked about that a minute ago because we definitely want to pay that down. You want to start with the credit card debt, And you want to make sure you're working. That's the biggest place where we can all fall into a terrible place, where we can get in debt. And it's so hard with those extremely high interest rates. We don't start paying them off. We're paying so much in interest, and getting those down. Now, if you have trouble, once you see how much your survival is and you want to stay within it, you can call your credit card company and put in an amount. Say, I want you to cut me off once I reach like $2,000 on the credit card. So if that helps monitor your spending, fantastic. Now remember, besides the credit card that you use for spending, then your purchases that are anywhere from $20 or less, we're going to cash a check. Now for me, I cash a check once a month for $400. That gives me and I go into my drawer, and once a week I take out $100, and that's what I use for little miscellaneous things, whether it's coffee or lunch or a magazine or whatever I'm picking up. I use that cash. So where you see spending in column 1, that's what I do, is I will write down in column 2 that I'm taking $400 for me for personal spending. You have extra lines on here, and you'll see miscellaneous. Sometimes you may have, oh gosh, it happened to us. We had to get the washer repaired. That was a repair item that doesn't normally come up, and I had to write a check for that, so that would go in column 3, so it's going to add to my expenses. But once you start tracking everything you spend your money on, it'll be great. So you should have 2 credit cards, one for business and one for personal. Being organized on how you charge things will make all these, between the P&L and the personal budget, very simple. So in your business, have a business checking and a business checking credit card, or a business credit card, so that those expenses only show up over there, and it's easy to put that P&L together. Personal budget, you want to have a checking account and a personal credit card, so you just get that statement. And in the beginning, I wouldn't just put the lump amount in your American Express or your MasterCard, but I'd break it into categories. So you could have food, entertainment, dry cleaning, hair, nails, the gym. So you can see actually what you spend in a 30-day period, because alone, I don't think people really look at that, and that's something that will be a huge aha for you. Our goal is that you learn where your money goes and you're paying attention to it. Now, step number 3, you want to accumulate a float account. So as we talked about, once you total your survival number, you take 3 times that survival number. That's how much you should build up in your float. So if you'll look in the bottom box, we always ask you to look at your money market balance. How much is in there? Okay? And then below, it's like, what does it need to be? So maybe your goal is that it needs to be about, maybe your survival's $8,000, so your goal would be $24,000 in the float, and maybe you have 9 right now, so you can see you need to build that up. And that money will always stay in that money market before you ever send anything to the stock market or mutual funds. You've got to have 3 times. We do not want you to have to sell something to have cash in case you have an emergency. So that's very, very important. So the float account is for, like it says on the screen, any unforeseen expenses, and it's 3 times your survival number. And you will also see that on the example that you'll be emailed after this webinar. Column 2 on the personal budget. So we talked about that. That's going to be what you're going to total to get that survival, all right? So now we've talked about survival. Okay, on the positive side, we're going to bring in more money than we owe in column 2, so we're going to have extra money. And once we take 20% and we're going to save it. So make sure you have a really good accountant that you can consult with, and that you have, a 401k or something. Maximize what you can invest in. And then you will also have mutual funds that we want you to, that would be the first place. So as you start accumulating money, so let's make an assumption that we're not really saving any money like I wasn't in 2001. So as I accumulated money, the first thing I did was make sure I paid off all credit card debt, and I started putting some of the money also into a savings, so I didn't have to use a credit card or borrow money or sell something in order to have cash to take care of an incident or an unforeseen thing that might happen. All right? So we want to start building up that money market, and we want to start paying down that debt. Now, on a side footnote, the one place agents tend to get in trouble is actually paying taxes. So that would be on the form prior to the personal budget, which is the P&L. And we'll do a webinar on the P&L in the future. You also would like to understand the P&L so you know if your business makes money and what you're doing and how you're structured and all this time you spend in your business, if it's netting you a profit. I walk you through a very detailed P&L in the book that I'll mention later, which is the Pathway to a $30 Million Business. So we do have that available. Many of you might be with some of our partners, and if you are, they can also get you that form, and they can help connect you to some information, all right? So once the company makes money and brings it over to the personal budget, now we've got to work on making sure that you're saving 20% every month. The goal will be to have no credit card debt and saving 20% and then starting to pay down your primary home. That's the path Rick put me on, and that's the path that allowed me to be where I am today. So it's very exciting that this is the path, okay? And what I'll tell you now, as we were talking about this a minute ago, so my survival was $11,000 with my dream home that I built. Refinanced twice, and I was able to pay off a commercial debt, and even doing all of that, I just paid off my dream home last month. So now my husband and I no longer have that payment, and our survival number now is down towards $4,000. We had a loan we paid off, and we also had a house we paid off. So how nice to know that I only need to make the $4,000 a month, not to stress at all, because I have the money working for me that Rick has helped me accumulate, paying me interest in what I need to live on, and also I'm still working and have a job because I love it. But I'm able to cut my hours back and just teach what I like to do, which is to help you have a better systematized business as possible and to teach you how to save money. So I want you in that same position, and this is a key component, and that is to really look at it. I didn't want to do it either. My husband and I used to take turns all the time. You do the money. No, you do the money, because we didn't like it. But once you start seeing it change, and it changes just by you being aware of how the money flows, you will get better and you will save money. And so we're now still going through, again, the top part here we've covered. So we have the list of bills that were in column 1. So you can fill them in the blank and change your form so that all of your bills are on there. And then we have the minimum we owe in column 2, which is the minimum stated on the bill we receive. All the money we bring in 5 and we subtract it, that gives us the extra money for the month. So we want to make sure we've saved 20% of what we brought in column 5. And that shows up in the money market balance. And that balance is determined by 3 times the amount of our survival number. So we are building a cushion, and we never get stressed if we have something we need to pay money on. The amount saved is going to be the difference between the amount you have to pay for your mortgage and what you paid over and above. So I've been paying over and above my mortgage for the last 2 years. That's because I am older, so I am turning 62. So my goal was to pay off the house. If you're young and starting in the business, or you're still building wealth and so forth, then you're not paying extra on that. You want to make sure your credit's clean and that you're saving your 20%, and then start paying down the house. All right, so the next thing right here in front of you in step 4 is investing. I told you to make sure you have a great accountant and maximize your money, whether it's a Roth IRA or a SEP or a 401k. Start saving your money, especially your tax-free money. We want to do that. Next in step number 5, you will start investing in the stock market, but you're not going to invest in anything risky, nothing until it's only mutual funds until you get $250,000 under your belt. That is a cushion that is, less volatile. It's B or C type stock. Get a great financial planner. Now, this is another person that if you partner up with correctly, you can refer each other a lot of business because they're working with other people who are investing money. So get and build a great, strong relationship between your financial planner and yourself. And they will also give you advice. So number one, mutual funds only until you reach $250,000. Then you can go to index funds. And some of this is just Greek. If you were like me in the beginning, I'm like, Rick, I don't even know what you're talking about because I don't even have enough money to think about it. So I just would do the mutual fund. And the great thing is at the bottom of the form, you keep up with where your money is every month. And all that takes is you're going online to look at your banking to see what's in your savings / money market would be your savings. And then the statements that you get for either whatever you've set up, your 401k or later stocks after you get over the 250 and move forward. So every month I record all the money I have on the bottom, where it is, okay, and then all the payments, what came in and what went out, my accounting form above. So again, number 3, hire a professional money manager, somebody that's going to help you. The last thing you do, number 4, buy individual stocks. You never own more than 5 to 8. You want to go with big companies and make sure you're financially secure, okay? You're going to be a little riskier as you're younger, and then as you get older, you also then can, as you head towards retirement, you're going to go into other things that will be less volatile and help pay the interest that you can live on and not work. Step number 6. Prepay your mortgage. What a difference. I think I told you about that after the 2 refinances. In the beginning, when Rick put me on an option arm, I always paid more than I owed, and so that helped me, but we paid that off last month, so that was an additional $5,800 that went straight to the bottom line. We don't have to pay anymore, and it feels fantastic. So now I have an asset I sit on that I can sell later and then invest that money. So I would make sure you talk to your mortgage person. If you're with one of our core lenders, get with them and make sure you're on your payment plan to prepay the mortgage. And then as you see on the screen, you get to count it as amount saved. If you owe $1,200 to the mortgage and you pay $1,300, we consider that saved because that's equity you're building into the house. So things in amount saved would be your automatic SEP or your IRA that you put money into. It would be the money you put into the savings account, the money you paid extra on the house. So that's how we all 20% save. Now, the coolest thing about this form is that our students in Level 3 do this, and I want you to just look at this. So as of September 1st, our core Level 3 students had saved over $10 million, almost $10.5 million because we track it. So if you look at the bottom, how cool is this? We always know what's in on the left, the savings account, what it should be, and then we figure out how much we save that month. Again, we always look at it because we want 20% saved. We keep up with how much we save year to date, which is what we took from all of our students, our 400 students, and came up with the 10.433, and that was only after 8 months of the year. We keep up with our cash net worth, and that's everything. If you want to make a note here, cash net worth in parentheses, everything except equity. So you wouldn't count the equity in the home or your rentals, but stocks, mutual funds, all those things you can sell along with the amount of money in your savings, we add that and get your cash. Then to know your total net worth, we would look at, and we add to it the equities in any home, rentals, or commercials that you have. We also track how much we give to charity year to date because we are very focused on making sure we pay it forward. Our goal at the core is to help you become the best that you can be every day, because when we're able and capable of working and making money, then it's like our responsibility on the planet to do as much as we can to maximize our earning potential so we have money that we can also pay it forward. Last year, our students gave away in charity, not hours worked, because that was a huge number too, but money, they gave over $6 million away. Be that person. If that's who you want to be, you want to be the most and the best for your financial security for your family and to do your part to save the planet, then this is the form you got to fill out every month, everybody, because it's going to tell you where to go. Now, some resources to help you. We have the roadmap to the $30 million business. If that book, I put in that book a specific chapter on the P&L, and it's detailed how to do it. I would encourage you to get that. We also have our core journey, which is some fabulous stories of what people have gone through to transform their business and their life. And then a great course that you can buy if you just want this course, and it's going to help you get some corporate accounts and some consistent lead generation. So that's there for you, which you can all visit on thecoretraining.com. We really want to be your coach because this is the only program that will take you from the time the lead comes in till the money gets in your personal budget. So if you're working too many hours, if you don't have enough saved and you want to build towards financial freedom, then join us in one of these, either the 12 or the next 24. And again, you can call the 800 number and we'll give you details on what those are all about, because we would love to have you. If you are doing or closing 10 million or more, you can call and I will do a free consultation and evaluation of your business. So please call in and you can ask for Lauren and she will book you into my schedule, because we want to be your coach. Also, I got a notation from Neil, who runs our webinars and all of our technology here, that she will email the handouts again along with the form. And so all of you, some of you are asking me a question about where do I get the form. So she's going to email you the personal budget, the how to use a cheat sheet, along with a sample. So those will go out to all of you for joining us today, because we're thrilled that you are here with us, that you took time to invest in yourself and your business, and on a topic that, hey, I got to say, it's not that, exciting. People are like, oh, gee, let me sign up to do a personal budget when I don't even like them. But listen, it is the key. What you are the weakest in, we want to strengthen. Now can you believe it is October and we're heading into the end of the year. November 1st, we're going to have a very important webinar. We're going to take you through goal setting, not just for your business, but the 7 areas of your life. So we have great forms for that. And if you haven't thought about it, you got to plan the 1st of November. Our students attending the summit will have their business plans done when they're completed with our summit event, and we do have 4 seats. If you are interested, if you're closing 10 million or more, just call the core today and ask for Reeta Casey. But we have 4 seats, and we're closed down in Palm Springs. But that is the theme of that event, goal setting. But I'm going to share with you, for anybody that wants to jump on the webinar with me, I'll give you how to set goals in the 7 areas of your life, so you have a fantastic 2017. So all of you, thank you so much for your time and your patience, and just for being attentive and wanting to do more for yourself and your family. This is Reeta Casey. We'll be sending out those forms, and thank you again. Have a fantastic Tuesday.